The Fed also took investors for a ride today after a central bank official put his foot down and argued against an interest rate hike when the Fed meets next. Our Steve Liesman has more.
A strong downdraft in stock prices combined with new worries about the economy for next year has the Fed debating publicly whether it ought to hike rates in December and how much, if at all, to hike rates in 2019. St. Louis Fed President James Bullard became the first Fed official to suggest the Fed should not hike in December and should instead push it back to January. The interest rate futures market had been putting about an 80% chance on that December hike, but came off those odds a bit on Bullard's comments. His remarks followed those from Fed Governor Lael Brainerd, who suggested the Fed should hike near term but adopt a less certain view next year, depending more on the economic data.
So the most likely path for the economy is positive, although some tailwinds that have provided a boost are fading, and we may face some cross currents. The global growth that provided a strong tailwind going into this year has moderated. Here at home, the impetus to growth from fiscal policy is likely to fade going into 2020, and after being exceptionally accommodative, financial conditions have tightened in recent months.
Over the past several weeks, the Fed has gone from being relatively confident in hiking several times next year to now suggesting that future hikes will depend on the data and the outlook.
There's a good chance that there will be a pause at some point in 2019, and we haven't had a pause. But I think that markets are, of course, pricing in a lot less tightening for next year. It's basically one hike price relative to that.
The November jobs report was weaker than expected, but 155,000 jobs created is still a strong number, and the unemployment rate stayed at a multi-decade low of 3.7%. Most Wall Street economists saw the numbers as strong enough for a December rate hike from the Fed, but weak enough that after that, the central bank probably should take a break. For Nightly Business Report, I'm Steve Liesman.